Hey all, welcome to ShareTreck. This is Raj here. It's going to be a brief video just to set the tone for 2024. Over the last week, I have been looking at various analysts and what they have been talking about, and a few themes stuck to mind. And I'm going to just talk about them very briefly. And this is what I'm going to keep at the back of my mind while I do technical analysis and look at various events that happen in the coming year. So the first theme is that US is not going to be in a recession. And there are a couple of reasons for that. The first reason is that the US mortgages are locked in for 30 years or 25 years. So people who have locked in their mortgage at low interest rates are not going to refinance as long as the rates are high. And that kind of money is going to be away from the market, and therefore it is going to have a deflationary effect on the economy. But it's not going to create any major problems as such. So that's point number one. Second point is that productivity is likely to go up because of AI. The next year is going to be focused on AI. AI is the driving theme for next year. We saw some effects of that this year itself in the last 6 months of 2023. That's only going to intensify in 2024. And that's going to increase the multiples significantly in the next 5 years. Therefore, we have to be getting in at the ground floor. And right now, NVIDIA might look expensive, AMD might look expensive, but I believe that 5 years down the line, if we look back at this point of time, all these shares would seem so cheap, we would be kicking ourselves for not getting into it. This is my personal opinion, not financial advice, but this is what I gleaned after looking at all the analysts and the various people who are talking about it. And the reason is that robotics has evolved to a certain extent where AI can be used along with it. Blockchain is also evolved, so AI can be used along with it. Now, this gives rise to a lot of use cases. For example, you have got property registry in the government, which could become a blockchain, and it will be much efficient. Like people own art and collectibles, and those all can be tokenized into the blockchain. So there is a lot of possibility out there. We already have robo advisors. So you could have robo units or AI units or entities which can manage these kind of assets for various organizations. So if an organization, let us say Apple is selling songs, something similar to that, then AI can be deployed out there to manage the whole thing, the ownership rights using blockchain. So those kind of use cases might come. I'm just giving you the top of mind recall of possibilities. But if you have to visualize it going forward, the first beneficiaries are going to be NVIDIA, Intel, AMD, TSMC, ASML, those kind of companies. And that is because they are selling the AI chips. So right now we are in the situation where companies which want to give AI infrastructure are buying the chips and building up the AI infrastructure. So they are investing in the hardware and they're investing in the software, developing language models and creating their own AI systems, which can then be offered as subscription to retail as well as businesses to use for improving the operations. Now, when it comes to businesses, the way I visualize it is that there will be a third category, like the big five consulting, like Ernst & Young and maybe Arthur Andersen, or you name those big five consultants who are doing ERP implementations right now, may even have a new line of business, which would be AI deployment. And in that, what they would be doing is they will be tying up with various AI providers, and they will have their consultants well trained in the language model. And then they would be selling those services to various corporate entities. And the consulting offering would be to brainstorm with the client and identify use cases within their organization which are going to be generating higher productivity and adding to the bottom line. And once those use cases are identified, then the technical team will go in and train the language models in order to discharge those roles. And then they would be tested and deployed into production. So that the benefits can start accruing to the bottom line. And when that happens, those industries and those companies will do better, and their competitors will also need the same. And the overall productivity is going to go up, and as a result of which the multiples of those companies' valuation will go up. So the valuation is not only going to go up for the companies offering language models and infrastructure, but also for the companies that are deploying those language models into use cases in their own industries. So overall, there is going to be an increase in productivity, and that is going to prevent us from going into any kind of a recession. And instead, it's going to make things cheaper. It's going to be disinflation, not deflation, and lower price for a better value. So that's what people are looking for. Another theme is that the market is looking for 25 basis points rate cuts. The Fed has said only 3 rate cuts in 2024 so far. And the general consensus seems to be that the Fed is behind the curve and it will have to change its language. So if the AI future that I was talking about were to happen, then the Fed will have to cut rates very quickly. The only thing I'm not clear about is how long it's going to take for consulting organizations to be able to start marketing it to industries, and for industries to deploy AI use cases into production and start harvesting the productivity gains. I think that aspect is way out, maybe 2 years down the line. But right now it is the infrastructure and hardware and software building, which is where the money is. And that's why the chips guys and the guys like Google and Microsoft and Meta, these are the companies which are going to benefit right now. So that's the overall theme, my friends. And for next week, I think we have to be very careful on from Wednesday onwards, because there's going to be unemployment data coming in. There's going to be some crude data, crude oil stats coming in. So those are the things that we'll have to watch. The Fed will be watching the JOLTS data and the unemployment data and hourly wages and other things to see if they have firmed up. If they have firmed up, that means the Fed will have to get a bit hawkish. If they remain the same or if they are weak, then I think we don't have to worry too much. So my strategy is that on the day 1 or day 2 of this year, I mean tomorrow and day after tomorrow, between those 2 days, I'm going to book profits and sit on the sidelines. My thesis is that by February or March, we would be going down and the bottom will be somewhere around February or March. And that's when I would like to re-enter the market and ride the way back up all the way to the end of the year. So this is my game plan. Please let me know what you think about it and put your game plan in the comments. Thanks and have a great day. Bye for now.